want to talk about something that could potentially help your trading drastically, especially if you're day trading and scalping the NASDAQ 100 in the futures market, whether you're trading personal funds or you're trading for a prop firm. And it's very simple. Maybe you've tried it in the past. Maybe, you've thought about it. Maybe sometimes you do it, sometimes you don't. But ultimately, it's sitting out for the first 15 minutes. Now, why is that? Well, especially as of late, the market ranges have been extremely large. They've been extremely choppy, where you're getting these kind of false breakout signals in the first 2 minutes, the first 5 minutes, 10 minutes, and you're going long and it's pulling back 20, 30, 35 points and then still continuing to go. You're getting these moves that are showing breakdown signals and you're jumping into a trade because it looks like it's ready to go. We're at the pre-market lows, or maybe we're at a previous swing low, and then it bounces 30 points and it kind of chops you up. And this is just called, what I call the old retail grind, right? So a lot of times as a retail trader, our stop losses are not going to necessarily be as big, as, let's say, a major institution or a fund or even a big time major retail player, because a lot of times those bigger players, they're positioning themselves for the bigger move. Okay. Now, again, they scalp, they have algos, they're in and out. But again, the majority of these larger moves can be fluctuated. And, it's a common thing that you hear a lot of the times where, you'll hear that the retail trader has no edge, or, they're always looking to, run your stop. It's not necessarily that, your stop is getting run per se. It's that, a retail trader with, again, even if we're trading prop firms where we do have leverage, we don't have the wiggle room to let things like the NASDAQ wiggle around 60, 70 points, because our bias in the setup is showing us a long position or a short position, right? So you're going to get caught in that retail grind of things. And sitting out the first 15 minutes is going to allow the opening range to kind of digest. Now, I'm not saying that if you sit out 15 minutes every single day that you're going to see the markets clear, but it's going to help. And what it's going to help do is it's going to help limit maybe one or two trades that are chopping you up. Because a lot of times, and I can speak for myself, a lot of times it might be that first trade that I get into, it's either the biggest trade of the day for me, or it's the biggest loser of the day, because it's the market trying to figure itself out. Now, sure, you can do technical analysis, look at supply and demand, look at the daily chart from the top down, and kind of see, where our bias should sit a little bit more. Should we be leaning a little bit more to the long side or to the short side? But truth be told, the market can do whatever it wants to do, and it's definitely going to need to figure itself out. And the more candlesticks and price action and movement and range that you kind of sit back and see, the better you're going to be able to see your setups come to you. I hope that makes sense. But the main thing that I need to, really emphasize and stress is discipline, because the discipline in actually sitting on your hands for the first 15 minutes. Now, again, if you have a strategy and you have a certain type of way of trading, okay, where you can catch these opening, with inside the first 5 or 10 minutes, you can catch some of this price fluctuation where you're maybe scalping 2 or 3 points, or, you're looking for like 10 ticks, 12 ticks, and your stop loss is extremely tight, and that's the way that you trade. And you sit here and you say, hey, D, I've been profitable for months and months and months. I don't really need to sit out the first 15 minutes, change nothing, right? I'm not here to change any of the successes that you're having, okay? What I'm trying to do is speak to people who may have trouble, okay, in the morning, who may not have that consistency off the open, who may be struggling to get those payouts or pass those evaluations. That's who I'm focused on. So I'm focusing on you because you're going to be the one who needs the majority of the help, the majority of the work, right? So when you sit out, let's take a look at today's price action. For example, market's going to open here on this red candle. We'll notice we kind of popped in pre-market and then looks like a good breakout trade. And then it immediately flushes 32 points below the 20 period moving average. Next candle opens up and it kind of looks like it's going to pop and then, you know, pulls back a little bit. It's chopping around in a 20-point range here. This is a 46-point range candle. It's going up and down 10 points at a time. Takes out the low of the previous candle, giving you an indicator that, you know, maybe it's time to go short, and goes down about just a few points and immediately spikes. So I could see how this would chop someone up. So if you look at the 15-minute mark, right? Let me show you this 15-minute mark here. I'm going to draw a candle to that 15-minute mark. So if I was to actually, what I'm going to do is I'm going to draw a box. That'll be better. So if I draw a box, okay, I draw this box. You see this box here? You see this black box? Again, this has got a little bit of pre-market. Let me tighten this up. But you see this black box here, how you get a big drastic push down, a big drastic spike and wick higher, a big push back down to the bottom of the range, and then it goes back up. And then at one point in time, this candle was filled red, looks like it's going short. This is sending you through a mental roller coaster, down and up, and then back down, and then up, and then back down, and then nope, we're going up. A lot of traders are going to chop themselves up. You're going to be looking for the breakdown. You're going to be buying the support. You're going to get in long. You're not going to sell. It's going to come back down and stop you out, because again, remember, these ranges are 30, 40 points. So unless you're running a 50 to 60 point stop loss, which I don't recommend anyone actually do if you're trading mini contracts, but it's not the best area of opportunity where you want to put your money. Okay, now this is just today's price action, but we can definitely go back. Let me just go back to yesterday, right? Just kind of show you guys what that first 15 minutes looked like. Now there was a day, I don't know if it was it yesterday or last week, where we had a period of around 2 hours of just mental destruction, right? Let me kind of go back and show you yesterday. Scroll back here, right here. Let me show you this. So this is yesterday's price action, and I'm going to show you the first 15 minutes here. It was yesterday where we had this long chop before we finally broke through. But look at the chop here in the first 15 minutes, okay? You see how it shoots up, comes back down, shoots up, comes back down, comes all the way down. This looks like we're going to go short, shoots all the way back up, loses it again, and then starts to kind of rally, right? So realistically, someone could have taken a breakout trade here, lost money. You could have taken the short here, lost money. You could have went short again, lost money. It really wasn't until 20, 25 minutes where you can maybe see a little bit of a trend to start catching some scalps to the upside, right? And yesterday was very difficult to trade. Very, very difficult until here. Until we lost that floor finally, and then we got that big flush. Again, that came hours after the open. But if you want to help your trading, and you want to practice and enforce discipline and rules and have a system and lose less trades off the open and stop blowing up accounts when you get funded or evaluation stage, allow the market to digest. Even if your strategy is waving a flag and saying, here it is, it's time to get in. Here's your setup. This is a picture perfect setup. Let it go. Let it go. Inside the first 15 minutes, let it go. If you're concerned that you're not going to get another setup based on your strategy for a long period of time, you can always switch to the 30-minute opening range and see what we do at the 30-minute opening range. You can always use the 15-minute opening range as well. I've been recently playing with the 15-minute opening range a little bit more. But, you know, the price action off the first 5, 10, 15 minutes is extremely difficult to trade. And again, that's not to say that traders can't make money. I've made plenty of money. I've taken trades where I can see the momentum and I'm just riding momentum. I get in, I get 5, 6 points, I get out. But when you're wrong, okay, that's what I want to focus on, because you will be wrong. when you're wrong, those losses are going to hit, and they're going to hit hard. They're a lot of times uncontrollable, okay, because of the volatility in the movement, and the range is so big. Try that, focus on it, but stick to it, okay? That doesn't mean tomorrow don't trade the first 15 minutes and then the day after you're back to trading the first minute candle, okay? Focus on something for at least 2 weeks at a time. Focus on something for at least the next 25 trades. That way you can gather some data. That way you can kind of calm things down. That way you can get on a system and routine. I'll see all of you guys on the next video. If you guys need those Apex accounts, 85% off, $85 or 80% off, I think, right? 80% off, $85 activation fees, 1 day to pass. Take advantage, load up if you need them. If you want to join Evolution Traders, that link is down in the description box below. I'll catch you guys on the next video.